Patrice Gautry, Chief Economist with UBP, is here in the Dukascopy TV studios today. First of all, Patrice, would you say fears on global growth are justified?
At this point of time, yes, because we are still risks and downside risk on China's economy, even if we are a bit reassured by the latest data published recently about the GDP growth in the third quarter, just lower than 7%. So there are still downside risk in China, and I would say as commodity prices remain a concern for economists and global markets, there are still downside risk coming from emerging countries. And the opposite, we have more positive signals coming from developed countries and developed economies. At this point of time, domestic demand, that is to say consumption and capital expenditure, are quite resilient, and they are able, in fact, to absorb the negative shocks coming from emerging countries. So concerns, but not, I would say, not very depressed about global growth. We think that a 3% rate of growth for next year would be largely achievable.
Okay, that seems encouraging. What about deflationary risks, though? Are they lying ahead of us?
Yeah, the risks are mainly coming from the commodity space, because we have seen that oil prices and metal prices continue to slow down, and even if recently the markets have tried to stabilize with better figures coming from China's economy, but there are still downside risks, and the amount of supply still exceeds the demand, the level of the demand. So that is to say, there are still downside risks coming from this commodity space. And the opposite, I would say that inflation in developed countries are mainly behaved by core inflation, that is to say service prices. And these service prices are more on a rising trend, that is to say they compensate the negative impact coming from the commodity space. So all in all, I would not say that we are just ahead of deflationary shocks or deflationary behavior for the world economy, as service prices counterbalance the negative heading coming from commodity space.
Okay. If we move on then to the economic cycle, let's concentrate on the US just for the moment, though. What would you tell us there?
I would say that the US economic cycle has turned more mature if we compare with the European one or what happens in China. I would not say we are in the latest part of the development economic cycle. That is to say, there are 50% chance that the US to continue to recover and to continue to increase, because we have not seen the end of the consumer cycle, and I would expect for the remaining part of this year better figures coming from capital expenditure.
Okay, well, markets' reaction would seem to favour QE infinite from central banks. What can you tell us there?
Yes, QE infinite, but we have already probably reached the limit of monetary policy and aggressive monetary policy. That is to say, at this point of time, giving more and more liquidity at a zero interest rate or cheap money does not really create a final demand. So this is the problematic for economists and markets. Markets seems to will and to favor that monetary policy will remain accommodative for a very, very long period of time. But as an economist, I would say that more liquidity does not create more demand. And a more balanced economic policy would be probably necessary, and particularly in developed countries, that is to say, to favor a bit of public demand, that is to say, to use the budgetary policy, even if we have a very high level of public debt to GDP numbers.
Okay, so you say more balance, but how can that be achieved? Particularly with central banks, what more can they do?
At this point of time, I would say globally, if we look at the map, of the world map, I would say that a bit of easing would be necessary coming from emerging central banks. And of course, the Fed will have to continue to support the US economy as long we have not a very strong and stable rate of growth. And this is the same for the ECB. That is to say, to give and to continue to give more liquidity. Liquidity in the economy is okay, but we have seen some headwinds coming from liquidity in specific segments, as for instance, in corporate credit. There is a lack of liquidity. It could be a paradox for central banks.
Okay, and lastly for today, Patrice, what about the equity markets? Are we positioned for a year-end rally there?
I do hope a year-end rally in the stock market, and particularly to continue to favor developed markets. The US has have made a small rally, but if we look at year-to-date performances, they are quite modest at this point of time. So I do think that the EPS, the earnings seasons would be great and would continue to favor positive surprises, not only in the US, but also in European markets, because we have seen a recovery. And this recovery should translate in higher revenues and higher profits and profitability from European companies.
Okay, we'll have to wait and see. Patrice, thank you for coming in today.
Thank you.
And thank you for watching. Keep clicking back to Ducoscopy TV for more updates and exclusive interviews. We'll see you next time.